Now, have you ever experienced this before? That you place a trade, you have a stop loss, you have a TP, and then the price just go all the way up to your stop loss. And right after you think, oh, this is a losing trade, the price is going the other side, and the price just drop all the way down into your directions. Have you ever experienced this before? In today's video, I'm going to talk about market manipulations. I know you feel frustrated, I know you feel angry, I know you feel sad because this happened over and over again, and you started to wonder whether something fishy is going on within the market that you trade, or someone is actually hunting your stop loss. I'm going to reveal all this in today's video, and make sure to smash the like button so YouTube knows that this is a high quality video and YouTube will share to more traders that need to see this. Now, if you are new traders, make sure to watch until the end because there are many ways the smart money can manipulate the market. Okay, so I'm going to tell you all the ways, and I'm going to tell you how you can prevent yourself from getting tracked. So let's get started. The smart money, also known as the money maker, the big players, they are the one that move the market. They have very huge capitals. They have access to the latest market orders, and that's why they have unfair advantages over us, the retail traders. And most importantly, they understand the retail traders' psychology very, very well, and they use this against us. Their goal as a smart money is to maximize their returns. How they maximize their return? Now, they have to buy low, sell high, right? This is how we maximize return in trading. So they want to buy low and sell high. So they will use multiple ways, multiple strategies to let them to be able to sell high and buy low. How they do that? Well, one way is they can create gap. This is one of their activities, right? They can create gap during the market open. You will see a huge gap, and this gap happened on March, which is GBP and ZACD, March 2020, over 1,000 pip. That's like the largest gap I ever seen in my trading career. And when this happened, a lot of traders got taken out at the maximum loss, and a lot of traders burst their trading capital. So gap can happen, all right? And another thing that's very common in the market is fake out. Fake out can happen to trap traders at the wrong side of the market, to trap traders that enter too early. And also they can have multiple tasks as well, right? Because the market is not ready. Those that got in too early, those are impatient, all right? They will suffer losses, or their order will get taken out at break even or loss. They cancel their trades, then the market commits just drop all the way down. Okay, in stock market, you will even see things like this happen. Smart money can thinning out their orders to create some kind of opportunities they need. And it is very common in stock market as well. They will release some rumors so that they entice traders or investors to sell off their stocks, which allow them to buy back all the stocks at much lower price. Now, all these are the common practice the smart money use to maximize their return, to allow them to buy low and sell high. Why they are able to do this effectively? Well, just now I mentioned, they understand retail traders very well. They know our stop loss placement, they know our entry, where we set our entry, and they know how we react to news events, right? That's why you will see some spike during news release. So they know how we react, they know how we traded blindly due to our own psychology, FOMO, fear of missing out, greed, fear of losses. And because they know us very well, they will use all these kind of strategies that I mentioned to maximize their return at your expense. All right. So let me show the activities on the chart, right? As you can see here, this is Euro Yen for our chart. What we can see, the price drop all the way down. We have some kind of flip zone right here. The price tested once, dropped all the way down, but it did not break the low, and the price kept testing this over and over again. So a lot of traders will be selling here. Retail traders will be selling here, and indeed this is a good area to sell. But what happened is the price unable to break low at all, then we have a sudden liquidity spike. Just when everyone think that, oh, you know what, the price is going up. Just when the sellers they're trying to sell here got taken out, the buyers started to think that, you know what, the price is going up, so they are started to buying. Then the price just reversed all the way down. So their huge orders are hidden right here, and the orders got filled when they have enough buyers trying to buy the market. They just have those big sell orders right here to push the price back down. Then guess what happened? Those that sell too early, they get taken out at break even or loss. Those that buy here, they get taken out at break even or losses. And the big money will definitely, or the smart money will definitely make the big return, right? Another example right here. So everyone see this is a support zone. So everyone that studies support resistance before, you read price action chart before, you know this is a support zone. When the price at here, guess what? You know you want to buy, right? So you buy. A lot of traders buy. Everyone wants to buy here. Even the smart money, they want to buy here. So the price go all the way up. Those that buy here, guess what? They do. Some of them take their profit, and some of them move their stop to break even. They lock in some profit. Majority take their profits here, or there's a sudden strong order, strong sell order goes against the momentum right here, the bullish momentum. The prices go all the way down, and then we have news event right here. When news event release, guess what? The price drop further down, take all the buyers out, right? So all the buyers that buy here, they got taken out. Either they take their profits already, or they get taken out at break even or small profits. Those that buy too late, they get taken out at a loss. Now, just when the price break the structure, guess what happened? Everyone wants to sell because they think the market is doing a breakout now, right? So they think that the price is going down, there's no more bullish momentum, the support has become a resistance, so we want to sell. So seller started selling right here. Just when everyone thinks this is a breakout, guess what happened? The prices go all the way up. The big orders, the smart money get into the game, take every sellers out, because the sellers have their stop loss somewhere around here, they get taken out, right? Then there's no more seller in the market, the prices go all the way up, the smart money make money again. And the sellers, they lost money, they lose their capital, right? So this happened over and over again in trading. Fake out, multiple tests, get, all right? So how do we prevent this from happen again? Again, these are smart money activity. They do this over and over again to maximize their return. However, they are not there to against you. They are not working with the brokers to hunt your stop loss. They are not there to against you personally. They know retail traders' trading psychology. They know at what levels you will feel FOMO, you will be angered, you will feel greedy, and at what price you will do what. They have the skills and resources to study the traders very, very well, and they are able to capitalize on our psychology. Now, let me show you on the chart on few things you can do to actually give yourself a better chance from being taken out at the loss, just to see your price go into your target directions. Okay, number one, the first thing you can do is use wider stops. Now, let's say for whatever reason you want to buy here because maybe you think this is a double top or double bottom, sorry. So this is a double bottom, you want to buy here. But then placing your stop loss right below, okay, meaning that you assume the price will go all the way up, right? So you want to give your stop loss a little bit more space, more breathing area, so that you won't get taken out that easy, okay? So in this case, maybe it can be slightly over below the BRN. Yeah, and then your stop loss will be fine. So if you have wider stops, use a more conservative stops so that there is more breathing room. That's one thing you can do. Number two, you want to enter slightly late. Now, when you see a breakout, okay, there's no way you can guarantee that this is a breakout. It could be a fake out. We don't know that. So what we want is, we do not want to be too aggressive right after the price break. We buy, break above, we buy, break below, we sell. No, no, no. We don't do this. We wait slightly longer. And you have 78% of the chance the price will retrace back to the SR zone if it really wants to go up. And for bearish, the price will retrace back to the SR zone if it really wants to go down. 78% of the chances the price will make a pullback. Okay, so based on my own trading data, my own strategy, this is what I observe, right? So what I'm trying to tell you is that a breakout, okay, doesn't mean the price will go into the same direction. There's a high chance that this could be a fake out. You want to acknowledge that, be aware of that, and you want to know what you want to do, what you have to do if this is a fake out. Let's say you have a buy here and you get taken out. What's your action plan afterwards? You still want to buy, or you want to convert your buy to sell? So if you get taken out because of fake out, maybe you can shift your positions, okay, from bullish to bearish, from bearish to bullish. If you want to sell here because the price drop, right, and the prices crawl all the way up, so you want to buy for whatever reason you want to buy, and then you want to wait for retracement. Now again, but if you buy and you find out that, oh, you know what, this is actually a fake out, then you can shift your position from bullish to bearish. The third thing that you can do is to manage your trade. Okay, what do I mean by manage your trade? Let's say you have a buy order right here, and then your stop loss is right here. Your TP is right here, your stop loss is below, you have more breathing area. So this is where you place a stop loss, all right? And then the price go all the way up, but then you realize the price unable to make new high anymore. In this case, guess what you want to do? You want to move your stop to break even. You want to manage your trade so that when the price return, you won't suffer the loss, all right? Because there's no momentum there, the price is not ready yet. At least you can get out at break even rather than a losing trade. And this can prevent you from the fake outs, or especially when the market is not ready. But if you get taken out at break even and you think this could be a valid setup, then you want to re-enter again. Re-enter, and the price at the obstacle or at the SR zone, then you move your stop to break even again, right? So every time the price move a high, you want to move your stop below the previous low, move the high, break the new high again, move your stop below the previous low, and move your stop below the previous low like this. This is how you're trailing your stop loss and lock in more and more profits, okay? You can do this, and it's not going to be easy, but you can do this. At least you have better chance to make more money. If you're able to do this, you don't have to be afraid of the smart money manipulations. Now, you need to know that we as a retail trader, we have no advantage at all. The smart money will always make trading activities difficult for us, but if we're able to wait longer, then we will have better advantages. You need to remember one thing: the market is slower than you think. The big move right here happened after a long period of corrections, right? The commitments always come late. Remember this: the market is slower than you think because the smart money, they are not always participating in the trades. They are not always trying to manipulate the chart. They have to be careful to build their orders slowly. Even the smart money, they have big capital, they cannot control the market, especially the forex market. But what they will do is they will build up their orders slowly. It all comes down to one thing, which is you need to have patience. If you have patience, then you don't have to worry about market manipulations. So those who are aggressive, they always want to get in the market early. They think the market is going to leave without them. Those are the person that have to worry about market manipulations. Because if you enter late, okay, it's fine, because most of the time you will get a pullback. You don't have to be the first to trade the market. You can take the pullback. There is no difference. You sell here and you sell here, you can still make 1 to 3, 1 to 4, 1 to 5, 1 to 6 risk rewards ratio. So getting in late is also part of the strategy for you to prevent yourself from getting trapped by the smart money, the market makers. All right, so that's all for today's video. I hope you learned something new. And remember, make sure to like, share, subscribe if you like this video so that YouTube will share to more traders. So I will see you in the next one.